Hello students, how are you all? I hope you are doing well. In this video, we are going to learn insurance claims for loss of profit concept. Plus, we have some three illustrations on this concept. Previously, I have uploaded loss of stock or insurance claims for loss of stock. There we have discussed some three illustration problems. Remaining we have three to four more illustration problems. Those illustration problems I will try to upload in a separate video. Okay, so in this video we are trying to learn the total concept of loss of profit plus three illustrations. See, most of the students, they will feel difficulty in understanding or in solving the problems on loss of profit because of the steps involved in this loss of profit. But when it comes to loss of stock, now it is easy. But when it comes to loss of profit, most of the students, they'll feel some difficulty. Now, I hope after watching this video, all your doubts gets clarified. And believe me, students, will get either one problem from insurance claims for loss of profit or loss of stock. Out of them, most important is loss of stock. Sir, it doesn't mean that you leave loss of profit. No, try to learn two concepts. But loss of stock is easy compared to loss of profit. Clear? So if you can understand the actual logic behind this loss of profit calculation now, then nothing is difficult. Clear, everybody? Now, without wasting much time, we try to understand this concept. First, look at, yeah, here generally, previously we have discussed loss of stock. Now observe carefully. Here, loss of profit. Sir, what is this loss of profit, sir? First of all, loss of profit means what? See, generally the business will do business now. When the business will do business, that means either providing goods or services, the business will generate turnover. Will sell goods now or will provide services. Means they will generate turnover. When they generate turnover, on that we earn some profit. On that we earn some profit. Now the concept comes, loss of profit means whatever the profit I am going to lose on my turnover, that is nothing but loss of profit. When do I get a loss of profit? When there is no turnover for my business, then I will get some loss of profit. Now the question comes, who will indemnify this loss? Who will indemnify this loss? Now the question comes, why should anybody indemnify the loss to you? Because your business failed to generate some turnover. With that you got some loss of profit. Then whom you are expecting to indemnify? Logic simple. Yes, sir. Suppose there are two possibilities. There are two possibilities for loss of stock. First one is due to temporary closing of business operations. Due to temporary closing of business operations. Next, second one, due to permanent closing of business operation. When I close the business permanently, then is nothing but what? Liquidation or winding up. In that case, I will not do any business, so that there is no business, so that there is no concept of loss of profit. Because if you do business and if you don't generate turnover, then the concept of loss of profit comes in. But here you are not doing any business, no? Okay, so due to permanent closing of business operation, there is no turnover, means no profit. No turnover, no profit. Now come to this concept, due to temporary closing of business operation. Now the question comes, sir, why should I temporarily close my business operation? Why should I temporarily close my business operation? Means, suppose wherever I am doing business now, so generally where we do business, in a shop, so building. Due to fire, due to fire accident in the building, suppose building is destroyed. Due to fire accident in the building got destroyed. In that case, I should stop my business operation for temporary period. That may range from 1 month, 2 months, 3 months, 6 months, 12 months, 18 months, 24 months, 36 months, whatever it may be. It depends on the nature of business and how much of stock, how much of destroyed, how the fire got destroyed the building. Okay, now the concept comes, whenever the building is destroyed now, then we have two losses. One is loss of stock. It is direct loss. Loss of stock is a direct loss. Now we have another loss, that is nothing but consequential loss, that is profit. Because here I should stop my business operations temporarily. Now, temporary means whatever the time period it may be. Temporarily, I should stop my business operations. So, direct loss is loss of stock, but indirect loss is what? Consequential loss. That is nothing but loss of profit. Loss of profit. Why, sir? Business, because here I stop my business operation. Yes, sir. When I stop my business operation for a particular period of time, say 6 months, then there are no sales. Yes, sir. When there are no sales now, then there is no concept of profit. Yes, sir. When there is no concept of profit, the business should incur, even though the business is not operating, but the business should incur some expenses. Here, the business we are stopping temporarily. But even though the business should pay some fixed expenses means what, sir? Rent of the building. At least some of the rent you have to pay now. Electricity you have to pay. Minimum electricity charges you have to pay. And salaries of permanent staff you have to pay. And whenever I have taken a loan now, on that I have to pay interest now. So like this, there are some fixed expenses which I need to incur even though I close my business for a temporary period of time. All these things are loss for me. Now, who will compensate all these losses? None of you. None. Nobody will compensate these losses. No, nobody will compensate this loss. That's why the business generally will take a insurance policy. That's why the business will take insurance policy. What is that insurance policy? Tell me. Fire insurance policy. Fire insurance policy is taken. Fire insurance policy is taken. Now the concept comes, due to fire accident, if building destroyed, we get some loss of stock. That we have seen already how to calculate the loss of stock. Now the concept comes, how do we calculate the loss of profit? You are saying that some profit is lost now. Yes. Now insurance companies, see, whenever occurred or happened, we should lodge a claim to the insurance company. Otherwise, how insurance company knows how much of loss you suffered? Whether the fire accident happened in your premises or not, how insurance company knows? So that you ascertain how much profit you lost or how much stock you lost. You request the insurance company, lodge a file, lodge the claim with the insurance company. Insurance company will verify the situation. They will send their valuationers and he will see the situation and he will approve. He will send this facts to the insurance company and they will approve your policy. That is secondary. But now the first question comes, how much amount I should lodge a claim with the insurance company? That's the first question comes. So here we have understood how to calculate the loss of stock. Whatever the stock as on the date of fire, first calculate that stock, and from that deduct how much stock salvaged. Then we get net claim out. Next we have checked whether average clause is applicable or not. When the average clause is applicable, stock as on the date of fire is more than the policy amount, then the average clause is applicable. Based on that, we have calculated claim amount. Now, the question comes, how much profit the business lost? For how much claim, how much amount we claim from the insurance company for loss of profit? How much amount we claim from the insurance company in the form of loss of profit? Yes or no? For that, we have to do some workings. For that, it is not possible directly. Na? Okay, this much of, hey, insurance company, I have lost some 1 crore rupee profit. You compensate that 1 crore rupee profit. Or I have lost some 50 crore rupees profit and you compensate that 50 crore rupees profit. Is it possible like that to say oral words? Not possible. So every working na we will do in a written format. Now the question comes, how do we solve the workings for calculation of loss of profit? For this, first you should understand the basic data which we require for calculation purpose. I repeat, whenever a fire accident happened in the building, due to that fire accident, if stock only lost, then you calculate only loss of profit. If you have any consequential loss, then you also calculate that loss of profit. Loss of profit, loss of stock separate, loss of profit separate. Now, to understand or to calculate the loss of profit, we need some basic data from the company. What is that basic data we need from the company, sir? Means, okay, now look at, assume this is the date of fire. Assume this is the date of fire. What's the date of fire? Tell me. 1/6/2024. 1/6/2024 is the date of fire. Assume. Yes, sir. Now, how much time? How much time has taken for restoration of your business? Because after a date of fire, now what we do? We start renovating our business premises. We start restoring our business premises which are destroyed by fire. Yes, sir. So it has taken. So the restoration is completed by 1/10/2024. On 1/6/2024, the fire occurred or happened in the business organization, and on 1/10/2024, now the total business organization is restored to its earlier condition. Okay, now you people tell me how much time it has taken to restore the business premises, sir. It has taken some 4 months time, sir. Means for the 4 months time period, you may not in a position to sell goods. Yes, sir. Completely, you are not in a position to sell goods. Means your turnover is zero during this 4 months time period. Yes, sir. Next question comes: have you done any business in the separate premises? Have you carried same business by taking another premises for rental for a temporary period? How much time it has taken? Tell me. 4 months, na? See, fire occurred on 1/6/2024. Slowly what we'll do, whatever the stock salvaged, na, whatever the stock salvaged and furniture salvaged, so we take all those furniture out from the building. Now what we'll do, we may temporarily take the business premises nearby locations, and we shift all those salvaged goods or assets, whatever it may be, to that temporary location, to that temporary location. So what we'll do, after 1 year, sorry, after 1 week or 10 days, we start slowly selling the product. We keep a board, na? The shop is shifted to so and so place for a temporary period of 6 months or whatever it may be. And our customers, our regular customers may not visit. All regular customers may not visit that place, but some of the customers may visit our place. Second possibility. First possibility is what? I may not sell goods totally, means zero turnover. Second one, I may sell goods, but it may be less than the sales which I was made in the previous year. Yes sir, no sir. Yes sir. Now first you calculate how much turnover you made during these 4 months. How much turnover you made this during these 4 months? That may be either zero, no business done sir in these 4 months. So zero is my turnover. Okay, fine. Sir, I have done some 10 lakhs rupees sales during these 4 months, sir. Okay, calculate that turnover. That turnover is called actual turnover. That turnover is called what? Actual turnover. Do remember for time being. Next one. Here the problem comes, sir. 4 months is the time period which I have taken for restoring my business organization. Okay, very good. Now, whether the insurance company agreed to indemnify the loss which is caused during these 4 months, take that period. Before taking the policy itself, the organization estimates that if any fire happened in the premises, how much time it takes to restore the business organization. Suppose Mr. A is running a jewelry shop. Mr. A is running a jewelry shop. Okay. Now, in this jewelry shop, some fire accident happened. Some fire occurred. If fire occurred in the premises, now how much time it takes to restore its earlier condition? Means he estimated that some 6 months time it takes. or some 3 months time it takes, to restore the business organization. Now he will take policy for that time period, 3 months. 3 months. So this you should identify indemnity period. 3 months, 6 months, 9 months. That depends on problem to problem. Yes, sir. The indemnity period is only 6 months. Calculate the actual restoration period. Actual restoration period is 4 months, whereas indemnity period is 6 months. Now the insurance company will accept your claim for 4 months, not entire 6 months. For 4 months, it will accept. Suppose, suppose the restoration period is 6 months. The restoration period is 6 months. So indemnity period is also 6 months. Yes, sir. Suppose the restoration period is 7 months. Restoration period is 7 months, but the indemnity period is only 6 months. Now the insurance company will accept only loss of profit for 6 months, not for 7 months, because you have taken policy for how much time period? 6 months. 6 months. This is called indemnity period. Is this logic clear, students? Yes, sir. Now here, please observe a timeline. So in which year the fire occurred? 1/6/2024 means what is the financial year? 2024-25. This is the financial year. Please draw a timeline here. Look at the timeline here. Okay, 1/4/2024 and 31/3/2025. This is the timeline. Okay, sir. On which date the fire happened? 1/6/2024. On which date the business premises restored? 1/10/2024. And this time period we have now, this is called business disruption period. Whatever these 4 months we have, this time period is called business disruption period. Is this logic clear, sir? Yes, sir. Now for this 4 months, how much turnover you lost? How much turnover you lost, that we calculate. On that we apply the gross profit rate. Then whatever the amount we get now, that is your loss of profit. That loss of profit may be adjusted for some calculations. Wait. Now the question comes, how much turnover lost? How much turnover lost? For that, but in this period now, we don't have actual data. In this period, I have actual turnover. Actual turnover means what? How much turnover I made during these 4 months. During these 4 months, how much turnover I have made? This is called actual turnover. This is called actual turnover. But we need how much turnover lost. How much turnover lost? For that, here we have a formula. Short sales. How much turnover lost? How do we calculate? Short sales. This is called short sales. Short sales is nothing but standard turnover. They have given a formula. Standard turnover minus actual turnover. The actual turnover means what, sir? Actual turnover nothing but the turnover made by the business organization during the disruption period. This is called actual turnover. Then what about the standard turnover, sir? To know that standard turnover, go to the previous year. Go to the previous year. Previous year is what? 1/4/2023 to 31/3/2024. Go to previous year once and check the corresponding time period to the date of fire in the preceding year. Check the corresponding period to the year of date of fire. To the year of date of fire. See, the date of fire occurred on 1/6/2024. Restoration period is 1/10/2024. Go back to the exact time period in the previous year. 1/6/2023 and 1/10/2023. 4 months time period. Yes, sir. So check how much turnover you made in the previous year. In the same time period, how much turnover you made? I repeat, in the same time period, how much turnover you made in the previous year? So previous year I have made some 10 crore turnover, sir. Previous year how much turnover I made? 10 crore. But current year I could able to made only 2 crore turnover due to this business interruption or business disruption. Means how much turnover I lost? Sir, I have lost some 8 crore turnover, sir. How much turnover I have lost? 8 crore. Yes or no, students? So how this 10 crore came? Tell me. By taking the previous year data. By taking the previous year data. Sir, why should we take the same time period, sir? Why should we take the same time period? Why don't another time period, sir. Why? Because there are some businesses which are seasonal businesses. Seasonal businesses means what? In the hot summer, there are some uh, the demand for the products. The demand for some products are more than compared to winter season or monsoon season. Yes or no? Suppose you take for example cool drinks, ice creams. Okay, so during the summer season, the cool drinks, ice creams, and like the similar products, there is huge demand like ACs, okay, and coolers. We have some huge demand for these products, and the rest of the time period, the demand is very less. Yes or no? And in case of monsoon season, what happens? So generally, in case of monsoon season, there is a demand for umbrellas, raincoats, like that. The winter season, again, some sweaters, scarves, scarves, so many. So means there is huge demand for some product in some seasons. For that purpose, we are taking the same period. Is it clear, students? So whatever the turnover I have made in the previous year to the corresponding period to the date of to the year of fire, then that is called standard turnover. Here, can you tell me how many words we understood till now? How many words we understood till now? Tell me. First one is actual turnover. First, we understood actual turnover. How much turnover you have made during the business disruption period. Second, we understood standard turnover. Standard turnover means the turnover of the corresponding period to the date of year of fire. Okay. The difference between these two is called short sales. The difference between these two are called short sales. Means how much turnover you have lost. How much turnover you have lost. In our example, actual turnover is 2 cr, standard turnover is 10 cr. Then what is our short sales? 10 cr minus 2 cr, that comes to 8 cr is the short sales. Okay, sir, I have calculated this one. Short sales I have calculated. Short sales I have calculated. Short sales is calculated by using which information? Tell me. Actual turnover and standard turnover. So in the problem you should identify is what? Actual turnover and standard turnover. Is this clear, students? Yes, sir. Now if any trend is there now, then we have to add some trend also to this standard turnover. The trend means what, sir? Generally year on year the business will grow now. Last year suppose my sale is 100. This year I will try to make some 110 sales turnover to 105 or 110 rupees turnover. So year on year my business, when the when my business is getting old, then I will try to improve my turnover. I will try to improve my turnover. Is it clear? Some trend, if it is given in the problem, then look at, we apply, otherwise we try to calculate. That depends on information. If nothing is given, ignore. Whatever the standard turnover is given, that we take. Is it clear? So these are the two words which we understood. Next, the third step is what? Short sale. Short sales. Sorry, short sales. This is our short sales. Okay. Next, I will try to calculate. Next, gross profit lost. Gross profit lost. How much profit, sir? You are saying loss of profit, na sir? Which profit, sir? Is it net profit or gross profit? Loss of profit means which profit, sir? We have gross profit and the net profit, na? Wait for some time. Okay. So they use in case of insurance, na, the terminology they use is gross profit. Gross profit lost. What is this gross profit? I will explain. Wait. Gross profit lost is equal to how much sales you lost, short sales, na, into GP rate. We have a formula for GP rate, na? Gross profit divided by sales into 100. Okay, GP rate. Now the concept comes, how much is the GP rate, sir? How much is the GP rate? GP rate is equal to, normally what is the formula? Gross profit by sales into 100. Gross profit by sales into 100. This is our normal GP rate. But in case of insurance, at the time of calculation of this loss of profit, do remember, gross profit means what? Gross profit means what? The gross profit means whatever the profit we get in the trading account debit side, na sir, that is our gross profit, sir. Yes, that is correct, 100% correct. But in case of this calculation, loss of profit calculation, gross profit means gross profit means observe carefully, gross profit is equal to net profit of previous year, net profit of previous year plus insured standing charges. Insured standing charges. So in this chapter, what is the meaning of gross profit? Tell me. Normally, what is the meaning of gross profit? Trading account debit side, whatever the difference we get in the trading account, na, either gross profit or gross loss, we call it. But for this purpose of calculation of loss of profit, gross profit means what? Net profit of previous year plus insured standing charges. Insured standing charges. Here there are two words. One is what? One is net profit of previous year. Second one is insured standing charges. Here we know net profit of previous year. Where do we get the net profit? P&L account debit side. P&L account credit is more than debit. We call it as net profit. If debit is more than credit, we call it as net loss. Yes or no, students? Yes, sir. Now the concept comes insured standing charges. Insured standing charges. See, there is a logic behind why we are adding insured standing charges. Insured standing charges means first try to understand this word standing charges. Then after you can understand insured standing charges. Sir, what is the meaning of standing charges, sir? Standing charges are those charges or expenses which are to be met even though you are not operating your business. If you are permanently closed, then that is a different situation. But here we are stopping our business for a temporary period. Even though we are not doing the business for a temporary period, but we need to incur some expenses. Like already I said, rent of the premises we have to pay, interest on loan we have to pay, salaries of permanent staff we have to pay, some benefits of the staff we have to pay, like this, some minimum electricity charges we have to pay. So all these are what? Some my fixed expenses. Even though I am not operating the business for a temporary period of time, I need to incur these expenses. How can I meet these expenses? You people tell me. Generally, how an organization meet all these expenses? Out of profit only, na? When I get profit, then only I can meet all these expenses. Yes, sir. Now, just have a look. Have a look on this P&L account. Just have a look on this P&L account. Observe here. Here, by gross profit, we write by gross profit. This gross profit is taken from trading account or gross loss. For time being, ignore gross loss. So to this gross profit, we add some incomes, na? Yes, sir. And we add some expenses. Suppose salaries of staff, office rent, printing and stationery, ignore, telephone charges, postage, insurance, audit fee, legal charges, electricity charges. Observe some expenses, depreciation, ignore, salaries of selling staff, ignore, advertising, go down rent, carriage outward, bad debts, provision for bad debts, finance charges, interest on loans, you observe. And like this, there are some expenses, no? And here we get profit, to net profit. Now what we are taking? We are taking this net profit and we are adding the expenses, fixed expenses. At the time of taking this loss of profit policy, we have to disclose to the insurance company, these are my standing charges. In addition to this profit, now see, when can I meet this profit? Tell me. When can I get this profit? Tell me. Only after deduction of these expenses. When can I meet these expenses? Only when I have profit. Only when I have profit. That's why what they are doing, whatever the gross profit here we have now, only when I have this gross profit, Only when I have this gross profit, then only it is possible to meet all these expenses. Yes, sir. So whatever the standing charges we have, plus whatever the profit we have, these two are lost. These two are lost. Yes, sir. So at the time of taking insurance policy, whatever the expenses we have mentioned in the policy we have mentioned in the application, na, those expenses are termed as standing charges, insured standing charges, insured standing charges. Is it clear, students? Yes, sir. Look at what is the first thing which you need to identify: actual turnover. Actual turnover is the turnover made during the period of business disruption. Next one, standard turnover. Standard turnover is the turnover which we made in the previous year, corresponding period to the year of fire. The difference between 1 and 2, the difference between 1 and 2, the difference between 1 and 2 is our short sales. This is the short sales, or this is the turnover lost. On this turnover, how much profit you lost? Means here we call it as gross profit. So gross profit is equal to short sales into GP rate. Normally, what's the formula for GP rate? Tell me. GP rate is equal to gross profit by sales into 100. Here gross profit means what? In this particular calculation, gross profit means net profit of previous year plus insured standing charges. Means in the problem you should identify what is the net profit of previous year plus what are the insured standing charges. Is it clear, students? So if you can apply, this GP rate, if you can apply this GP rate on the short sales, then we get GP lost, gross profit lost. Is it clear? Yes, sir. Now next problem comes here. Here the insurance company is agreed to pay some insured standing charges only. But you people tell me, in addition to these expenses, I repeat, in addition to these insured standing charges, the business may incur some extra expenses. I repeat, in addition to these insured standing charges, the business may incur some additional expenses for running business during the disruption period. Yes, sir. Now we are requesting the insurance company. Insurance company, you are anyway giving us some insured standing charges, but here during this business disruption period, I have also incurred some additional expenses. I have also incurred some additional expenses. Is it clear? So now the next concept comes additional expenses. Observe. Additional expenses. So here it is GP lost. Okay, very good. You lost this gross profit. Now, yes, we are ready to compensate. But one more thing we are asking to the insurance company, in addition to this standing insurance charges, now I have also incurred some additional expenses during this business interruption. What about those expenses? Why don't you claim for these expenses? We are asking the insurance company. Okay, insurance company is thinking and telling us, okay, do one thing. We pay whatever the additional expenses you have incurred. Please let me know how much additional expenses you have incurred. Okay, sir. Additional expenses. Now the insurance company is calculating some small calculation. What is that calculation? Whatever the additional expenses you have incurred, insurance company is not going to refund those additional expenses, or they are not going to give claim for those additional expenses. They are giving some calculation, some A, B, C calculations they are giving. Lower or least of the following. Least of the following. Least of the following is allowed as additional expenses. You have incurred additional expenses. Very good. We agree for that. But whatever the calculation we give now, you do calculate accordingly. We allow the additional expenses. So least of the following is allowed as additional expenses. First one is what, sir? First one is what? Actual additional expenses. Actual additional expenses. How much actual additional expenses you have incurred? Sir, I have incurred some 10,000, sir. For example, I am writing. Okay, very good. You have incurred 10,000 rupees expense now. See, when business incur expense, it should generate some revenue. When business incur expense, it should generate some revenue. Yes, sir. Means sales made due to additional expenses. How much sales or turnover you made? How much turnover you made due to these additional expenses? You try to calculate. Okay, sir. On that, how much profit you generated? GP rate. You apply GP rate. The second calculation they are giving. By incurring this 10,000 rupees, how much sales you made during the period of business disruption? Into GP rate you calculate. Then we'll get some amount. Na? Let us say this amount is some 5,000 rupees. Let us say sales during the year, some amount, into GP rate, some amount, some percentage. Then the amount is 5,000. Assume. Next one. And they are giving a big calculation here. What is that calculation? Look at additional expenses. Additional expenses you have incurred. Na? Yes, sir. So I am taking some proportionate. I am taking some proportionate of all expenses. Means net profit plus all standing charges. All standing charges divided by net profit plus insured standing charges divided by net profit plus all standing charges. This is the formula we use. This formula. Actual additional expenses into net profit plus insured standing charges divided by net profit plus all standing charges. This will give you in the problem. This they will give you in the problem. Sir, all standing charges means what, sir? All standing charges. All standing charges nothing but insured standing charges plus uninsured standing charges. Uninsured standing charges means what? Our P&L account contains so many expenses. No? Our P&L account contains so many expenses. So here they are asking, they are giving net profit plus insured standing charges. Previous year, how much expenses you insured? Okay, but previous year, what is your total expenses? All standing charges. What is your total expenses? Standing charges. So we take that proportionate amount, and let us say the proportionate amount is, assume some 4,000 rupees is the proportionate amount. Least of the following: 10,000 plus 5,000 or 5,000 or 4,000. Which is the least of the amount? 4,000 is the least of the amount. Least of the following. Now, we are requesting the insurance company for what amounts? Tell me. One is GP lost. Second one is additional expenses. So next step is gross claim. Gross claim. Gross claim is nothing but what? GP lost. How much gross profit you lost plus admissible additional expenses. Whatever the additional expenses you have incurred now, I am not going to give you total amount. I am going to give you only admissible. Admissible means least of the following. This total amount minus any savings in insured standing charges. See here, you have insured some standing charges now. If anything is saved, means what? Suppose the rent of the premises is 1 lakh. We requested the landlord, sir, building got destroyed, sir. Now it takes some time to restore, sir. Please take 50% of the rent during this period, sir. Means 50,000 rupees is saved in the insured standing charges. Yes, sir. So you take any saving in insured standing charges. Yes, this is the sixth step. Gross claim. Gross claim. Next, seventh step is very, very important. Seventh step is very, very important. Seventh step. Here, what is our gross profit lost? So we check the policy value. Suppose policy value is less than the claim amount. Just a minute. We check the actual policy should be taken. For how much amount we take policy. So that is our next step. Nothing but this step. Observe insurable value. This is called insurable value. How do we take insurable value? Adjusted annual turnover into GP rate. This is very important step, students. This is very important step. This video is going to be some 1 to 1.5 hour. Why? Because these steps you need to understand first. Till now, how many steps we understood? Step 6. First step, tell me. Calculate short sales. Calculate short sales. For that, standard turnover minus actual turnover of for indemnity period. Next, we have calculated second step, determination of GP rate. GP by sales. Next, ascertainment of gross profit. How do we calculate gross profit? Tell me. Net profit for the previous year plus insured standing charges. Next, we calculated GP lost on short sales. So GP lost is equal to short sales into GP rate. Next, we have calculated admissible additional expenses. List of the following. Next, we have calculated gross claim. Now we are checking whether average clause is applicable or not. Now we are going to check whether average clause is applicable or not. In case of insurance loss of stock, now we have seen average clause is applicable or not. Average clause is applicable or not. So here also we are going to check whether the average clause is applicable or not. Is it clear, everybody? Yes, sir. So for that, first we check what is the insurable value. Insurable value is nothing but for how much amount you take policy. For how much amount you are supposed to take policy. Sir, how do I know, sir? For that purpose, they are asking, just do one thing. Just whatever the date of fire, na? What's the date of fire? Tell me. 1/6/2024. From this date, go back exactly 12 months. Go back to 12 months. I repeat. Whatever the date of fire, na? From this date, go back to 12 months. Go back to 12 months. Not previous year. No. Not previous financial year. No. From the date of fire, exactly go back to 12 months. Suppose the date of fire is 1/6/2024. Previously go to 12 months. Means May 2024, April 2024, March 2024, February 2024, January 2024, December 2023, November 2023, October 2023. Like this, go back to 12 months preceding the date of fire. So here what is the last date? Means 12 months ending 30th May 2023. Whatever the sales we have during this period, now this is called annual turnover. This is called annual turnover. Annual turnover. This is very important for this step. Annual turnover. How can I know, sir? Practically, you can see the books, sales ledger. How much sales we made during the previous months. You go back. But here in this problem, now in the examination problems, they give you the concept. I mean, they give you the information. Is it clear, everybody? So annual turnover. If any trend is there for this annual turnover, we add some trend, some 5% increase in sales or 10% trend. Okay, we add it. Is it clear? Yes, sir. So annual turnover. This is the turnover preceding 12 months from the date of fire. Okay. Into GP rate. Whatever the GP rate we have calculated, same GP rate. So this is the insurable value. Let us say the insurable value is 10 lakhs. Assume the insurable value is 10 lakhs. But we have taken policy for 7 lakhs. What is the policy value? 7 lakhs. So you people tell me, actually insurable value is how much? 10 lakhs. Whereas the policy value is how much? 7 lakhs. Means average clause applicable or not? Yes, sir. Actually, you are supposed to take policy for 10 lakhs now, but you have taken policy only for how much? 7 lakhs. So, average clause is applicable. Average clause is applicable. Suppose, suppose the reverse situation. Reverse situation is, this is the insurable value. Insurable value is 7 lakhs, whereas the policy value is 10 lakhs. Insurable value is 7 lakhs, whereas the policy value is 10 lakhs. Means there is no concept of average clause. Whatever the loss you have now, actual loss means what? In step 6. Step 6, whatever the loss we have, the total amount will be will give as a claim by the insurance company. But average clause is only applicable when the step 7 means insurable value is more than policy value. Sir, how can we know policy value, sir? It is given in the problem. How can we know policy value? It is given in the problem. Yes, sir. No, students. Yes, sir. So, claim to be lodged. Situation is one is what? When average clause is applicable. Simple. What is your claim? Net claim is equal to gross claim into policy value divided by insurable value. In case of loss of stock, now what's the formula we have used? Amount of stock lost into policy value divided by total stock on the date of fire. Yes, sir. Here also, whatever the gross claim, it is our step 6. Step 6 into policy value given in the problem divided by insurable value, nothing but step 7. Is it clear, students? Yes, sir. Situation 2, when the average clause is not applicable. When the average clause is not applicable, when the insurable value is less than the policy value. Insurable value is less than the policy value. Then whatever the net claim means, whatever step 6 we have calculated, na, the total amount is given by the insurance company. Understood these steps, students? Don't by heart. Don't by heart. Whenever you are solving problem, na, don't by heart anything. Follow step by step process. That's it. So whatever the problem it is on loss of profit, or however the problem it is on loss of profit, calculate these steps. First, calculate gross profit. Second, determine gross profit rate. So here they give you current year data and previous year data. They give you current year data and previous year data. By following this current year data and previous year data, we have to calculate these steps. Okay. Just now you people do one thing, just pause the video and try to understand these steps once again. And terminology is also very important. Indemnity period, standard turnover, adjusted annual turnover, standing charges. Okay, this terminology also very important. Once you are thorough with this concept now, then we start solving some problems. Is it clear? Yes, sir. Now look at, we try to solve illustration 9 first. Illustration 9, because it is a direct data. It is a direct data. When we get some indirect data, na, then we discuss again. Now look at one by one point. Illustration 9. From the following details, calculate consequential loss claim. Consequential loss claim means loss of profit. Consequential loss claim means loss of profit. First one, date of fire. Here is not given. Okay, ignore. September 1st is the date of fire. And indemnity period is how many months? 6 months. Okay. Period of disruption, September 1st to February 1st. Means on September 1st, the fire happened. February 1st, the business is restored. Okay. Calculate time period. September 1st means September, October, November, December, January, February 1st. February 1st means only 5 months. Don't consider February 1st. Calculate September, October, November, December, January. 5 months. No? Actual business disruption period is 5 months. But whereas the indemnity period is 6 months. Now the insurance company can give you 5 months indemnity period only. Don't expect 6 months indemnity period. They give you only 5 months indemnity period. Okay. Sum insured. Sum insured is nothing but policy value. Sum insured is nothing but policy value. Okay, sir. This is our policy value. Okay. Next one. Sales were 6 lakhs for preceding financial year ended 31st. Preceding financial year ended 31st means this is our previous year sales. This is just our previous year sales. This is not our, see here you need to calculate actual turnover Next, standard turnover. Next, annual turnover. This is previous year sales. This is just previous year sales. Actual turnover means during the business disruption period, how much sales we made. Standard turnover means corresponding to the period of year of fire. Then what is your turnover, total turnover? Annual turnover means preceding preceding 12 months, preceding 12 months sales to the date of fire, preceding 12 months to the date of fire, whatever the turnover we have made, that is called annual turnover. Okay, next one. Next one, net profit for preceding financial year 36,000. What is the net profit? 36,000 in the previous financial year, plus insured standing charges 72. Insured standing charges 72. With this information, what you can calculate? First step, you can calculate gross profit now. You can calculate gross profit. Yes, sir. Just a minute. Yes. Illustration 9, look at. So here, with this information, you can calculate gross profit. 36,000. No? Illustration 10. Yeah. Look at here. Illustration. It is illustration 9. Okay. Fine. No issues. Just a minute. See, suppose this is illustration 9. Now tell me, first what we calculate? Gross profit. Gross profit is nothing but net profit plus insured standing charges. This is our first step now. Yes, sir. What is our net profit? Tell me. What is our net profit? 36,000. What is our net profit? 36,000. And what are our standing charges? 72,000. Can you tell me what is our total sales? I mean total gross profit. 36,000 plus 72,000 will get 1 lakh 8,000 rupees is our gross profit. This is our first step. Second step, calculate GP rate. Calculate GP rate formula. GP rate by, this is previous year sales, students. Previous year sales, do you remember? Into 100. So previous year gross profit is 1 lakh 8,000 and previous year sales given in the problem now, how much? 6 lakhs. Means 1 lakh divided by 6 lakhs. How much we are getting? 18%. This is our GP rate. This is our GP rate. Sir, what is this, sir? Already this GP rate is given here, na, sir. 18. Rate of gross profit 18%. Yes, I have calculated to explain how this 18% came. So the 18% came like this. Is it clear? Yes, sir. Sir, is there any requirement to calculate these things? No need. Just I have explained how to we solve the problem. Next step, look at. Next step. Turnover during disruption period 67,500 means it is our actual turnover. 67,500 actual turnover. Yes, sir. Next, standing uninsured standing charges. Uninsured standing charges 6,000. Can you tell me total standing charges? Yes, sir. Previous year insured 72 plus 6,000. So total standing charges or all standing charges are 78,000. Okay, sir. Next, annual turnover for 12 months immediately preceding the date of fire 6 lakh 60. What is this 6 lakh 60? Tell me. This is nothing but our annual turnover 6 lakh 60,000. Annual turnover. Next, standard turnover, that is for corresponding months in the year preceding the date of fire 2 lakh 25,000 means this is our 2 lakh 25,000. Okay, now look at the steps again. First we calculate gross profit, second we calculate gross profit rate, step 3 we calculate short sales means step 3 short sales. is equal to, short sales is nothing but what? Standard turnover minus actual turnover. What is your standard turnover? Tell me. Standard turnover is 225. Standard turnover is 225 minus actual turnover is 67,500. 67,500. And what is our short sales? 225 minus 67,500. It comes 157,500. This much of short sales we made during the year. Fourth step, I will calculate GP lost on this short sales. See, this is turnover lost, not profit lost. This is turnover lost. On this turnover, how much GP lost? Means 1,57,500 into, actually I have to apply what? This 18% on this amount. This 18% on this amount. But observe in the problem. A special clause stipulated. What is that? Increase in rate GP by 2%. So the previous year gross profit is 18%, but now they are saying increase the gross profit by 2%. Means the gross profit rate is how much? Actually, the gross profit rate is 18% plus they are saying to increase it by 2%. Means how much is gross profit rate now? New gross profit rate 20%. Very important point. Means 20%. How much we are getting? 157,500 into 20%. Okay. And one more thing. Increase in turnover, standard and annual 10%. Means there is a trend. Increase in trend 10%. If this point is not there now, whatever the problem we are doing, it is correct. But what they said, increase in standard turnover 10%. Means just observe carefully. What is the standard turnover here? 225. It is increased by 10%. Means can I take 110% here? 110%? Yes, sir. Minus what is my actual turnover? 67,500. Now tell me how much I will get. 225 is my standard turnover into 110% because it is increased now. 2,47,500 minus 67,500. So how much I am getting? 1,80,000 is my short sales. So here I will replace the amount 1,80,000. If there is no increase in trend na, so straight away we will take 2,25,000 minus 67,500. On this 1,80,000 short sales, I have lost my GP 36,000. This is my GP lost 36,000. Okay, so I will request the insurance company to pay this 36,000 gross profit lost. But fifth step is what? Calculation of admissible additional expenses. Here what they said, list of the following. They said. So look at in the problem and identify how much is actual, additional expenses. Observe carefully. Increase in the cost of working capital 12,000 with a saving of insured standing charges 4,500 during the disruption period. Here increase in the cost of working capital is nothing but our expenses 12,000 rupees. Additional expenses. Reduced turnover avoided through increase in working capital 30,000. Means here we have incurred some 12,000 rupees working capital increase. Due to this, how much sales we can able to create? 30,000 rupees turnover. So reduced turnover avoided means we have avoid means 30,000 turnover is more increased. 30,000. So here we can calculate. First one is least of the following 12,000. Next one, how much turnover is made? 30,000 into what is my gross profit rate? 20%. Nothing but 6,000. Next one, what is the actual expenses? 12,000 plus what is total profit? Total profit is previous year profit. What is our total profit? Tell me. What is our total profit? Net profit 36,000 previous year plus all insured standing charges. 1,08,000 into 36,000 plus 72,000. It is just substituting the amounts in the formula. That's it. 36,000 plus all insured standing, all charges, 72 plus 6. 72 plus 6. So 78. Calculate the proportionate amount. How much we get? 1,08,000 divided by 1,12,000. 1,12,000 we get into 12,000. How much we get here? 15,571. Check it once. 15,000. Okay. 28. 30 plus 78. 1,14,000. Sorry. 1,08,000 divided by 114 into 12,000. 11,368 rupees. Now, can you tell me the least of the following? 6,000. 6,000 is the least of the following. So this is the admissible expenses. So next step we can calculate gross claim. Gross claim formula we know na? GP lost 36 plus admissible expenses 6,000, and they said how much expenses they saved. Insured standing charges saved 4,500. Means 36,000 plus 6,000 minus 4,500. Actually, we request the insurance company to pay 37,500. But before making it as your statement, we should check the insurable value. We should check the average clause is applicable or not. So check insurable value. Insurable value is nothing but what? Annual turnover into GP rate. Annual turnover is nothing but previous year annual turnover is how much? 6,60,000 they have given. Annual turnover 6,60,000. But in the problem they have given trend na 10% increase. So I will take 110%. Can I take 110%? Yes, sir. And what is my GP rate? 20%. So 6,60,000 into 110% into 20% means actually I should take the policy for how much? 145,200. Actually I should take the policy for how much? 145,200, whereas I have taken policy for 1,08,900. Tell me, policy value is more, sorry, insurable value is more than policy value. Means here the average clause is applicable. Yes, sir. Check the amount here. Insurable value 1,45,200. And what's the net claim, sir? Net claim is equal to gross claim. Gross claim nothing but 37,500 into policy value. Policy value is nothing but what? 1,08,900 divided by insurable value 1,45,200. And this is our final answer, 28,125. Just it is sequence of steps. Very, very easy. Once you have the concept in your mind, na, it is easy. So here GP rate directly they have taken. If this 18% is not given, na, then you have to follow these first two steps. First two steps you have to follow. 7 marks, students. 7 marks. Is it clear, everybody? So pause the video and try to observe this problem once again. Okay. Next, I am going to start illustration 8. Observe illustration 8. See, when they give you this type of information, na, it is easy. But when they give you this type of information, na, it's a little bit confusing information. Now observe carefully. On account of fire on June 15, 2023, in business house of a company, the working remained disturbed up to December 15, 2023. First, calculate how many months the business disruption period calculate. Disruption period from June 15, July 15, August 15, September, October, November, December 15. Means 6 months. From June 15 to December 15. How many months? 6 months. Okay. Now, this 6 months we have to compare with indemnity period also. Now check. As a result of which, it was not possible to affect any sales. Okay. The company had taken out an insurance policy with an average clause against consequential loss for 1,40,000. So, for how much amount they have taken policy? For 1,40,000 and a period of 7 months. Okay. What's the indemnity period? 7 months. But our business disruption period is 6 months. It is less than the indemnity period. Yes, sir. Fine. Has been upgraded upon an indemnity period. An increase of 25% was marked in the current year sales as compared to last year. Means what? Suppose last year sale is 100. Last year sale is 100. And what is current year sale? 25% increased. Means 125. Current year sale is 125. And this 25% increase now, if they have not specified anything, we apply for standard turnover plus we apply for annual turnover. Okay. Next. The company incurred an additional expenditure of 12,000. Now the question comes whether the insurance company allow this 12,000 rupees additional expenses or not. To make sales possible and made a saving of 2,000 in standing insured charges. This is helpful in our step 6 for calculation of total claim or gross claim. Next, ascertain the claim under the consequential loss policy, keeping the following additional information in view. Identify the information first. Actual sales from 15/6/2023 to 15/12/2023, 70,000. Okay. Sales from 15/6/2022 to 15/12/2022. What is this? Same time period. Look at it's year change. So it is called standard turnover. Standard turnover is called standard turnover. Is it clear, students? And it is our actual turnover. Fine, sir. Next, net profit for the financial year 80,000. For the financial year means previous year. Next, insured standing charges for last financial year 70. So by using this information, what you can calculate immediately? Gross profit. What you can calculate immediately? Gross profit. Look at problem number 8. Gross profit we can calculate. This is our first step. Gross profit is equal to net profit for the previous year plus insured standing charges. 80,000 plus 70,000. 1,50,000 is our gross profit. First calculation over. Next calculation is what? G period. G period is nothing but what? Gross profit by sales. Gross profit is nothing but what? Tell me. Gross profit 1.5 lakh. And we know the previous year sales. Previous year sales given how much? Yeah. Total standing charge. Okay. Turnover for last financial year 6 lakhs. What is the last financial year turnover? Last financial year turnover. It is not annual turnover. Last financial year turnover 6 lakhs. So 150 divided by 6 lakhs, that is 25%. GP rate also calculated. After calculation of GP rate, what is the next step? Immediately calculate short sales. Short sales is nothing but standard turnover minus actual turnover. Standard turnover is nothing but what? It is given in the problem now. Standard turnover 240. But it is increased by 25%. Yes, sir. 2,40,000 into 125% we can write. Yes, sir. 2,40,000 into 125% minus what is our actual turnover during the business disruption period? 70,000. So that what we can calculate? Short sales. So here gross profit rate is there and short sales is there. Can you calculate gross profit lost? Gross profit lost. Yes, sir. 2,30,000 into 25%. 57,500 gross profit lost. Okay. The next step comes admissible additional admissible expenses. For this we need 3 calculations. Now this is very important. First, how much expenses they have incurred? They said 12,000 rupees. And by incurring this 12,000 rupees, how much turnover you generated? In the problem na, they did not mention how much turnover they generated by using 12,000 like in illustration 9. So in that case, whatever the sales we have made during the business disruption period na, we assume the total sales made by incurring this 12,000 rupees additional expenses. This is very important point. Okay, so 70,000 into GP rate 25%. So first one 12,000 rupees additional expenses. Next 70,000 into 25%, 17,500. Next 12,000 into this formula is very important. The numerator what we take? 80,000 in plus insured standing charges, 80 plus 70. Next here we take denominator 80,000 plus 120. How did this 120 came? Tell me. Total standing charges for last financial year 120. Total standing charges for last financial year 120. Okay, sir. Next, turnover from 16/6/2022 to 6 2023 means this is the 12 months time period, 12 months time period preceding the date of fire, preceding the date of fire. What is the date of fire? 15 6 23. Go back to 12 months. Go back to 12 months means 16 6 22. 16 6 22. So from 16 6 to 22 to 15 6 2023, what is our annual turnover? 5 lakh 60. This is helpful for us in calculating insurable value. Okay, now look at, after calculating additional expenses, now tell me gross profit lost 57,500, whereas admissible expenses 9,000. List of the following. Total claim calculate. Gross claim. Gross claim is what? GP lost plus additional admissible expenses plus saving in insured standing charges. They have given 2,000 rupees standing charges saved. Means what is the total amount? Gross claim 64,500. Before claiming lodge or before lodging for the claim, check whether average clause is applicable or not. So to understand, to know insurance, first calculate insurable value. How do we calculate? Annual turnover. Annual turnover is how much? 5 lakh 60. And they said there is 25% increase in trend na? Yes sir. Now 5 lakh 60 into 125%, we get 5 lakh 60 into 125%, we get annual adjusted annual turnover into 25% GP rate. We get 1 lakh 75,000. This is the insurable value. But whereas we have taken policy for how much? 140. So insurable value is more than policy value. So average clause is applicable. Yes sir, perfect. So now the net claim is nothing but gross claim into policy value divided by insurable value. Gross claim is how much? 64,500 into policy value 140 divided by insurable value 175. We get net claim 51,600 over. So just observe this data. However the data it may be, first calculate gross profit. Net profit plus insured standing charges. Gross profit rate, short sales, gross profit lost, admissible expenses. Next calculate gross claim, insurable value, net claim over. However the data it may be, identify the data which is required for calculation purpose. Okay, and why I am saying this approach na, next problem what which we are going to solve is very typical problem. Okay, that's why I am saying follow these steps. See, look at the basic data is date of fire, date of restoration. How much time period? 6 months. Indemnity period 7 months. Policy value 140. Increase in trend 25%. It is applicable for standard turnover and annual turnover. Saving in charges 2,000. Like this, you can draft the minimum data, right? I hope this illustration 8 and 9 clear, students. Okay, now come to important. Important in terms of concept. In terms of concept, that is illustration 10. Illustration 10, very very important. The moment the student looks this information now, first of all he cannot understand. Here they are giving different dates, so before that please correct the dates. Here is 2020, 2021, 2022, it is 2023. Okay, 2020, 21, 22, 23 over. Next, now look at the data. See, I said already, however the data it may be, follow this approach. However the data it may be, follow this approach. Then you can easily complete this problem. Look at how do we approach this problem. Look at, a fire occurred on 15th March 2023 in the premises of Omega Limited. What is the date of fire? This is the date of fire. Next, a loss of profit policy was taken by the Omega Limited for 80,000. This is the policy value. Now what we do, we calculate insurable value, that is compared with 80,000. Insurable value more than the policy value, then average clause is applicable. When insurable value is less than the policy value, average clause is not applicable. This you have to keep while reading the problem na, you need to keep all these things in your mind. Next, the indemnity period was 3 months. Okay, the indemnity period is what? 3 months. Now we need to check what is our business disruption period. Indemnity period is 3 months. Okay, then what is our business disruption period? Try to calculate. Next, Net profit for the year ended 31st March 2021 was 56,000. What is this 31st March 2021? Previous year data. Yes, sir. And standing charges, all insured amount to 41,600. All insured means whatever the standing charges we have in our business now, all those are insured. 49,600. Okay, sir. Fine. Next, determine insurance claim from the following details available from quarterly sales tax returns. Means here they are giving quarterly data. Quarterly data. Observe from January 1st to 31st March. One quarter. Yes, sir. 2020 quarter, 2021, 22, 23. April 1st to June 30th. Again one quarter. Yes, sir. July 1st to September 30th. One quarter. Yes, sir. October 1st to December 31st. One quarter. Fine. Now, here they said March 15 to 2023. But they did not mention what is the restoration date. What is the business restoration date? They did not mention. In that case, we assume whatever the indemnity period we have, that is as our restoration period or business disruption period. Can you tell me the business disruption period here? Can you tell me the business disruption period? March 15, 23. Or I will write like this. What is the business disruption period? Tell me. 15th March 2023 to 3 months now. 15/6/2023. This is our business disruption period. Is this clear, everybody? Yes, sir. Fine. Now, by looking this paragraph, first look at this illustration 10. Just I have given the same illustration 10 in a pictorial representation. Observe carefully. This is the date of fire 15/3/2023. What is the policy value? 80,000. Indemnity period is 3 months. Net profit for the year they have given straight away 56,000 and insured standing charges they have given 49,600. So if you draw the column, what is the current year? Tell me what is the current year? They are closing books of accounts on 31st December every year, means they are following calendar year. Yes, sir. So current year is nothing but 1/1/2023 to 31/12/2023. This is our current year. And whatever the turnover we have now, this is our turnover, total turnover from 1/1/2023 to 31/3/2023 turnover. Next, here they have given date of fire 15/3/2023. And what is our restoration period? 15/6/2023. So this date is not given in the problem, na sir? Yes, but they said 3 months is the indemnity period. That's why we have taken 3 months. So whatever the turnover we have in this period, na, this is called actual turnover. From what date to what date? 15/3/2023 to 15/6/2023. Now go to previous year. Previous year is what? 2022. Previous year is 2022. Go to the corresponding time period or corresponding months to the date of the year of fire. See, 15/3/2022 to 15/6/2022. 15/3/2022 to 15/6/2022. So here we get standard turnover. Standard turnover. This is very, very important in terms of concept, students. Next. Now what about annual turnover, sir? Observe. This is the date of fire. From this date now, go back to 12 months. Go back to 12 months. And whatever the date we have, that is our, 16/3/2022. Go back to 12 months. And this time period sales is called annual turnover. Annual turnover. Next one. Observe. From this date to this date. This is previous year sales turnover for 22. Turnover for 22. Okay. So in this problem, these are very important. Now, this is the information we have. But now the question comes, what is the actual turnover? In the previous problems, now illustration 9 and 8, they have given actual turnover straight away, standard turnover straight away, and annual turnover straight away, and previous year turnover also straight away. But in this problem, you should calculate these 4. That is the important concept in this problem. You should calculate annual turnover. You should calculate standard turnover. You should calculate annual turnover. You should calculate turnover for previous year. Next, you should observe the trend also. The previous problems, na previous two problems, illustration 8 they mentioned 25% is the markup, means increase in sales, and illustration 9 they said some 10% is the increase in sales. Like that, you observe the illustration 10 information, and we should identify whether we have any trend or not. Is it clear? Yes sir. Now first come to this gross profit calculation. First come to gross profit calculation. Illustration 10. Observe carefully. Illustration 10. Okay, first gross profit. This is our step. I said already, however the problem it is, on loss of profit, you calculate these steps first. First gross profit, sir. Gross profit. Look at the problem and tell me what is our gross profit. Gross profit they have given clearly na 56,500. 56,500. Gross profit of 22 plus insured standing charges, they said all insured standing charges 49,600. Then total is how much? 1,05,600 is our gross profit. Next, calculate gross profit rate. How do we calculate gross profit rate? Tell me. Gross profit divided by sales. Which year sales? Previous year sales. Sales for 2022. Gross profit we calculated 1,05,600. Then what is our sales for the year 2022? For the year 2022. Look at the problem. Look at the problem. Look at 2022 year. Look at 2022 year. Okay, like this you calculate all years profit. First calculate total profit for all years. 1,20,000 plus 80,000 plus 1 lakh plus 136. So here we get 436 2020. Next calculate 21. 1,30,000 plus 90,000 plus 1,10,000 plus 1,50,000. You get 4,80,000. And calculate 2022 sales. 142, 1 lakh, 120, 166. Here we get 5,28,000. Total sales for 2022. 2023, 1,30,000 plus 40 plus 1 lakh plus 1,60,000. So here we get 4,30,000. This is our current year, students. Current year 2023. So here you can observe. Look at this diagram. What is current year sales? 2023, 4,30,000. Next, what is our actual turnover that we calculate? Next, what is the turnover for 2022? Just now we have calculated how much? 5,28,000. So apply this in the formula. Apply this. So 5,28,000. What is our gross profit rate? 20%. Second step completed. Now calculate short sales. Short sales is the difference between standard turnover and actual turnover. Yes or no? Short sales is difference between standard turnover, actual turnover. But in the problem, they did not mention standard turnover and actual turnover. And when we are taking standard turnover means, we also check any trend. Any trend. So here we need three things. One is standard turnover, actual turnover, and any trend is there. First we go to standard turnover calculation and actual turnover calculation. Okay. Now, look at in the problem. What is our actual turnover? Tell me. From what date to what date? What date to what date? 15/3/2023 to 15/6/2023. I repeat, 15/3/2023 to 15/6/2023. And look at in the problem. Can you identify the same time period? Same time period. Sales from 15/3/2023 to 15/6/2023. Is it possible to observe this time period? Observe carefully. This time period you observe in the problem first. Here they have given sales for 16/3/2022, 16/3, 31/3, 16/6, 30th/6, 16/6. Observe. Sales from what date to what date? 15/3/2023 to 15/6/2023. Did they give? No, sir. but they have given quarterly sales. They have given quarterly sales. Sir, quarterly sales means what, sir? Observe. How do I calculate this? So first I will calculate 1 3 2023 to 31st, sorry, yeah, 1 3 2023 to, or else, what I can do? Yeah, I will take 1 3 2023 quarter calculate. Okay, here quarterly information how they have given. Okay, April wise now. Okay, just a minute. Quarterly information they have given now. See, 15 3 2023. After this, what is the quarter starting? 1st April 2023 to next quarter ending April, May, June. June means 30th June 2023. I will take first this quarter sales. This quarter sales I will take. Okay, now from this what I minus, here, here 15 3 to 14. Whatever the sales happen na, I will deduct. 15 3 to 14. Whatever the sales I have happened, sorry, plus add. 15 3 to 14 2023. Whatever the sales happen na, add. Next, we need what date? Here it is 15 6 2023. So sales between 15 6 to 30th 6. I will deduct. Look at here, or else I will write like this. Observe carefully. Very, very important. 15 3 2023 to 1 4 2023. Okay. Next quarter is 30th 6 2023. This is one quarter, students. This is one quarter. Now what I am doing? First I am taking this I am taking this quarter sales. To this what I am adding? I am adding 15 3 2023 to 1 4 2023 sales I am adding. And but I need 15 6 data na. The difference of sales between this period I will deduct. Very, very important. Tell me first up, these dates are directly not available. These dates are directly not available. These dates are directly not available. Yes or no? Yes, sir. So that I will take indirect information. How? First I will take first quarter 2023. This period take quarter 1 4 2023 to 30th 6 2023. This is one quarter. Now what I will do? But I need sales from what date? 15 3 to 2023. Add these 15 days sales. Add this 15 days sales, sir. How do I get, sir? Look at the problem. 16 3 to 31 3 2023 sales are nil. Look at the problem. Observe the problem. Observe the problem. Next, I don't require the sales till 30th 6 2023. I require the sales till 15 6 2023. Means whatever the sales here I have now from 16 6 to 30th 6, I don't require. Cancel those sales. How much, sir? 16 6 2023 to 30th 6 2023. How much sales I have? 6,000. Means, look at, I will calculate. Current year, na 2023 is the current year. And what is the sales from April 1st to June 30th? 40,000. So here I am taking 40,000 sales. How much is sales for this quarter? 40,000. And what is the sales from 15 3 2023 to 31st 3 2023? Nil. This sales nil. Now what is the sales from 16 6 to 30th 6 2023? 6,000 minus. So what is my actual sales during this period? Business disruption period is 36,000. This is how we calculate indirectly actual sales. Indirectly actual sales. Look at, this is how they have calculated. How much? 34,000. 34,000, sorry. 34,000 they have calculated. This calculation you observe. This calculation. Please observe this calculation. Okay, how much we are getting? 34,000. This is our working note 1. Same you can write down as working note 1, 34,000. So substitute this in the problem. Actual sales is how much? Sorry, actual turnover how much? 36,000 is our actual turnover. Okay, just a minute. And how this 70,000 came? Yeah, that is illustration 8. That is illustration 8. Now look at 34,000 is our actual turnover. This is our working note 1. In the same manner, calculate standard turnover. Standard turnover is required. That is working note 2. See, standard turnover. Observe this. This is our standard turnover. Standard turnover calculation, look at. So we need turnover from what date to what date? In 3 2023 to 15/6 2023. But this direct information is not available. Yes, sir. So that I will take quarterly information, means April to June. April 22 to 30th June, 1 lakh. But here I require 15th March to April 1st. What are the sales? Look at 15th March 23. Write down it is 22, not 23. 22 write down 22. So 15/3/2022 to 1st April 2022, how much sales? 16/3/2022 to 16/31/3/2022, how much sales? 28,000. So that's why they have deducted, they have added 28. Now I don't require sales till what date? 30th June. I require sales only till 15th June. So whatever the extra sales now from 16th June to 30th June, deduct. Look at in the problem they have given 24,000. Then what is your standard turnover? 1,04,000. What is your standard turnover? 1,04,000. Observe here. This is our 1,04,000. This is our working note 2. Actual turnover, working note 1. Standard turnover, working note 2. Then I require any trend. Any trend. So how do I calculate any trend, sir? How do I calculate any trend? Suppose to get trend calculation, 2021-22 sales are 120. Assume, and go to previous year 21-22 2021 sales are 100. Now compare to previous year whether there is any increase in the current year sales or not. How do I calculate? Very simple. Current year sales 120 minus previous year sales 100 divided by previous year sales is the base. So what is the increasing trend here? 20%. In the same manner, we try to calculate a trend by following previous 3 years data 20, 21, 22. By following these 3 years data, I will try to calculate this trend. So how the trend calculation they made? Look at this working note. Sales of 2021. Write down this 21. Yeah, 20. So sales of 20 already we calculated total 436,400. 21 total sales 480. 22 total sales are 528. So calculate rate of turnover change. Formula: turnover of current year we have seen, turnover of previous year divided by turnover of previous year. First we calculate for 2022. 2022. 2022 means 2022 sales. 2022 sales are 528 minus 21 sales. 21 sales is 480 divided by 21 sales 480. So that here we are getting 10% rate. Now come to 21. 21 means take 21 sales. 21 sales is 480. Previous year 20. 20 sales are 436,400 divided by 20 sales. So here also we are getting approximately 10%. So what is your observation here? By observing these two, there is a trend of 10%. So every year there is a trend of 10% upward trend. Means current year also we apply for standard turnover and annual turnover, we apply this trend. So already here we have calculated standard turnover now. Already here we have calculated standard turnover into 110%. So that here we are getting 80,400 rupees our short sales. The same calculation they have made like this. Don't look at this answer, look at this answer. Then it is easy. But you should calculate working note separately. Working note 1 trend, working note 2 standard turnover, working note 3 annual turnover. Is it clear, students? Yes, sir. Next, gross profit lost. Gross profit lost is equal to short sales into GP rate. Short sales 80,400, GP rate 20%. Gross profit lost is 16,880. Next, additional admissible expenses. In the entire problem, you cannot find additional expenses incurred. Additional expenses incurred. No. So additional expenses are nil. Then what is our gross claim, sir? Gross claim is nothing but gross profit lost plus additional expenses. You write this formula. Saving in insured standing charges. Now, there are no admissible expenses and at the same time there are no savings in insured standing charges. So that what is our gross claim? 16,080. But now the concept comes, what is insurable value? Insurable value means what? 12 months preceding the date of fire. This is our next calculation. Previous problems they have given, but now what is our total annual turnover? To that we add some trend. Trend already calculated 110%. Now this annual turnover is going to be our working note 4. Now look at, yeah, from this date now, from this date 15/3/2023, go back to 12 months. Go back to 12 months means 16/3/2022 to 15/3/2023. So here calculate quarter wise. 16/3/2023. You take next quarter means 1/4/2022. 1/4/2022 to which year we take 31/3/2023. I am taking information from 1/4/2022 to 31/3/2023. Total sales minus what I am doing here. I don't require sales from 16/3/23 to 31/3/2023. I don't require this sales. Minus plus here actually I should start my turnover from 16/3/2022, but I have taken from which year, which date? 1/4/2022. So that I will add 16/3/2022 to 31/3/2022 sales I will add, so that I will get annual turnover. That is going to be our next working note. Next working note, working note 4. Yeah, working note 4. Yeah, look at working note 4, annual turnover calculation. Annual turnover calculation is this, from 31st March to 31st. Next quarter wise they are taking, look at 4 quarters. Next they are taking from January to 31st March. Next less March 16 to March 31st 2023. So that we are getting annual turnover. Okay. Now annual turnover is how much? Annual turnover working note 4 calculated how much? 5,44,000 into 110%, because trend is there now, into 20% is the gross profit rate. So actually what is the insurable value? 1,19,680. But whereas policy is taken for how much? Policy is taken for how much? Policy is taken for 80,000. So here the insurable value is more than the policy value. So average clause is applicable. So what is our insurable value? We have calculated. Next, net claim. What is our gross claim? 16,080 into policy value 80 divided by insurable value 119,680. 10,749 is our answer. So you follow this approach, student. This approach is going to be very easy. Wherever we require working note, that working note we prepare. In this, how many working notes? See, working note 1, calculation of trend. You can look at your material. Working note 2, calculation of standard turnover. Look at your material. Working note 3, calculation of actual turnover. Working note 4, calculation of annual turnover. That's it. These 4 workings. This is our main answer. This is our main answer. For supporting this answer, you calculate these 4 working notes. This is our presentation for this problem. Is it clear, students? Yes, sir. Now, on this concept, we have a problem in the previous year question paper that looks like exactly similar to illustration 9. That looks like exactly similar to illustration 9. Try to practice that problem. So with this, I am concluding this loss of profit. I hope I have given some addition to this, to your preparation for December 2025 by investing. This is not spending. By investing this 1.5 hour to 1 hour 40 minutes, I hope I have given some input to you to gain some 7 marks from this insurance claim for loss of profit. So loss of stock and loss of profit put together, we get either one question. Okay, so if possible in the next video I will try to cover the remaining problems of loss of stock. So before watching this video, see, loss of stock is different and loss of profit is totally different. Is it clear, students? Yes, sir. So I will share this insurance claims notes in the Telegram group. Okay, you can join in the Telegram group, that is CMA Inter Accounting by PC Rao. You can simply type CMA Inter Accounting by PC Rao. You can join in the Telegram group. You will get that notes also. Is it clear, students? That's it. We meet again in the next video. Till then, bye bye everyone.